Brian Wills joins me, and you can learn what he's up to by going to brianwillsmedia.com, brianwillsmedia.com, and you're going to find his. How many books are you up to here now, Brian? I count 5 at least.
2 more coming. So I found out I'm a writer. When I turned 50, I was like, son of a gun, I'm a writer. I never knew that.
Oh, gee. You know, it's kind of interesting. What do you go through to determine what's the next topic?
I've done training, either sales or business training for 20 years. And so most of the books are stories I've told, examples I've used, stuff I've analyzed. So I feel like a lot of times in these books, I'm not really making stuff up as I go. It's just stuff I've talked about to 1,000 people so many times. I'm just putting it really, memorializing it into a book format. So far, writing to me is super easy, mostly because this is just what I do.
Sure. Do you help people elevate their business to the next level? You've probably seen in your career pretty consistent errors in implementation. Could you give us some insight on that, especially in the real estate world? What have you noticed with people getting started in business that you've had to correct?
From a general business standpoint, Jack, I would tell you the biggest problem people have is they don't understand financial analysis. The reason is most people that start businesses, I call them technicians, and it's part of my book. There's entrepreneurs or salespeople, there's managers, and there's technicians. Most people that start businesses are technicians. In other words, I was really good at being a plumber, so I started a plumbing business. Or I was a really good real estate agent, so I started a real estate brokerage firm. Or I was, whatever your talent is, whatever you're technical at doing, you start a business. And unfortunately, understanding the techniques of what you do are much of Joe the plumber. Joe starts a business because he's a good plumber. And if Joe's plumbing fails, it will not be because Joe doesn't know how to be a plumber. It will be because Joe doesn't know how to run a business. And understanding how to actually run a business and doing financial analysis and everything else that goes with it, biggest reason why people fail.
So before they get started in starting a business, maybe that's a good place to start is what do you think? What type of ducks do they need to get in a row before they even consider it?
I wrote an article for Forbes and it's called The 5 Keys to Success, which are the same 5 keys to failure. And here we go. Number 1, why are you doing this? Too many people start a business without a strong enough why. And what they don't understand is that business is hard, it's tough, it's going to be brutal, things are going to fall apart. And if you're not prepared to go through the bad times, if your why isn't strong enough, you'll end up quitting before you get to where you want to go. So that's a huge one. The second one is, what is it you sell? And why should anybody buy it from you? And that is a big challenge with most young business owners. They don't know what they sell and why people should buy it. In other words, if what you sell is a commodity and they can buy it from anybody, why should they buy it from you? And if you can't answer the question why they should buy it from you, then you're never going to be able to scale your business. The third one is, who are you in the business? Are you an entrepreneur? Are you a salesperson? Are you a technician? Are you a manager? Whatever you're good at, you need to backfill with other people who are strong where you're weak. Otherwise, your business will not be able to scale also. The fourth one is checking your ego. And I use this in the context of people who start businesses, Jack, generally don't know how to run a business. And it's the fact that you don't know how to run a business that's going to get you in trouble. And so I tell people, if you're going to start a business or you even have a business and it's not growing the way you want it to, find somebody who can come in and help you, whether it's a consultant, a coach, a mentor, somebody who's been there and done that. And then check your ego and let them guide you so that you can skip all the mistakes you're about to make. And the last key, which is number 5, is if you don't know how to do financial analysis, you either need to learn, and financial analysis is critical, or once again, you need to bring somebody in who understands financial analysis who can help you succeed. You do those 5 things, you'll be good. You don't do those 5 things and you'll probably fail.
One of the things that interesting is that you tell people to what are you selling and why should people buy it from you? It seems like a lot of people when they get into business, they fight the concept that they're selling anything. That
Yeah.
they don't want to be in the concept or do you find that to be the case as well?
Yes, there are people, and most of those people are engineering type people who think it's just the product, the product, the product. It's not just the product. And you can use this in any industry, but since we're on the REI network here, let's talk about people who get into the real estate business. If you don't know why people should buy real estate from you or shop with real estate with you, then they're not going to, because there are a million people who can do that. There's a million people who can provide that service. You've got to come up with something that is unique about you or what you offer so that people will come to you and use you or buy your product or service. That is critical. And if you, and I had a guy call, he started an insurance agency, and I spent years in the insurance industry training people. And he said, "Hey, I started my own insurance agency and I need that key phrase that I can use to get through the gatekeepers and get in the door to these companies." And I remember asking him, I said, "Well, why should they buy from you?" And he said, "Because I give great customer service." And I said, "So what? Everybody does that." He's like, "But I care." I said, "So what? Everybody does that. That's not a reason why they're going to do business with you." He goes, "Well, what should I say?" I said, "I don't know. You tell me why people should buy from you, and then you won't have to ask me the question. But when you figure that out, that's why people will buy from you, and that's what you do." And it works the same in any industry with any product and any services.
Hmm. Sounds really consistent regarding some thoughts I've been having. And I think I'm trying to remember the book I read recently, and it had some parables in it, essentially talking about, just because you know how to make a cake, you shouldn't be opening a cake shop.
Mhm.
The concept of why they should be selling things with you or why people should buy something from you. You gave the insurance as an example. It's really interesting in the fact that a lot of people aren't going to sit down and actually go through this exercise, which I think they strongly do. But more times than not, real estate investing becomes more of a or seen as a side hustle or a
Mhm.
hobby.
Yeah.
And it's not treated as a business. It's not
Mhm.
treated seriously. And then more times than not, it becomes this revolving door.
Mhm. Exactly, because it's the barrier to entry. Well, if you're going to be in real estate sales as an agent, the barrier to entry is pretty simple. You pass a test, you're an agent. Most of them never do anything. Works the same way in the insurance industry. People go out and get their license, they never do anything. I find a lot of people that get into the real estate investing side end up buying one property and they think it's just going to cash flow, and 20 years from now they'll be a millionaire, and that's just not the way it works. And so after a year, they end up selling it at a loss, or they've lost money along the way, and then they talk about how bad real estate is. And it wasn't that real estate was bad, it's that you didn't treat it like a business. You didn't understand the ups and downs, the ebb and the flow, how this thing works and how it doesn't. So whatever you're going to do, find somebody who's done it and can tell you what to do and what not to do to skip all those mistakes that you are going to make. If you're going to get in business, you're going to make mistakes. Wouldn't you rather somebody tell you which ones not to make?
Is there any kind of unique strategy to help a person identify that unique identifier?
That's something I tell people. Either you sit down with your friends and relatives and whoever and start going, and they need to be people who, by the way, are devil's advocate, not your best friend. And when you say things like, "But I care," and they go, "No, nobody cares if you care. That's just not the deal." Or bring in a coach or a consultant or a mentor, somebody who's been down this road, and let them take you through the process. I will tell you, Jack, the biggest problem is going to be ego. It's always ego. And it's most entrepreneurs who are hard drivers think that everything they do is right and correct and that everybody else is wrong. That's the normal ego of a hard driving entrepreneur. And so they have a hard time checking their ego. Most people that start businesses think they know exactly what they need to do, and most of the time they don't. And so it really is about bringing somebody in who can help you, checking your ego and listening to them, and let them help you avoid the mistakes.
And one of those other things, and it's also amazing how many people don't actually s- write down their company goals and what they're trying to
Mhm.
hit. To draw out that target. How do you even know what you're aiming for?
Especially if you've never done it. If you've never done it, there's no possible way you can know what you're about to do. There's just no way. And so you're really shooting in the dark. You're guessing. And people who guess generally lose. Jack, you're familiar with Apple, right? We all have Apple phones.
Yep.
Do you know
Tim Cook.
Tim Cook? Do you know that Tim Cook has a board of directors of 12 people? And they come in every quarter and they say, "Hey, Tim, what's going on in the business? Tell us about your problems." And Tim's at the other end going, "Well, we got problems with Foxconn. We got problems with distribution. We got problems with AI. These Chinese guys came out today. This is true. They can create AI like 100 less of cost than we can. And Apple, everybody's stocks crashing today." And they all say, "Well, based on our experience and what we've been through and what we've done, these are our suggestions for how you can make Apple a better company." And then when they're done, Tim takes all the suggestions from his board, which in small business we call coaches, mentors, and consultants, and he goes and he makes Apple a better company. And then Tim has a personal coach as well. If Tim Cook, running the biggest company on the planet, needs 13 people to help him make good decisions, what in the world do you think you're doing as a small business owner thinking you can do it all on your own? It just doesn't make any sense. Find people who can help.
It's kind of interesting you bring up this Chinese AI thing, because what is a big standout to me, it kind of echoes what you were just talking about as well. The reason that this Chinese company was able to do this much quicker and a lot cheaper is because they're building on the lessons from the previous AI companies that have already blazed that trail. I mean,
Mhm.
it's obvious that that's what has happened. I mean, and to wrap up to the success just took significantly less time.
Sure. So why would they have wanted to start from scratch and learn it all on their own? And
Mhm.
why are you as a business owner wanting to try and create a business from scratch all on your own without bringing somebody in to help you?
And another thing that you have, and I think it's the last book that you released, was 40 lessons in negotiation, called No, the Psychology of Sales and Negotiation. And I see you take the NO out of negotiation. Could you talk a little bit about that? I suspect the premise here, but can you talk a little bit about why you wrote a sales book? I mean, there's a lot of them, let's be honest.
Yep. And I've done
And you
sales
must
training. I've trained over 1,000 people. I've done sales training for years, from contact center sales training to individuals. And there's really two concepts behind. The first one I actually took from Richard Branson. I got to spend a week with him last year on Necker Island. Super great guy, amazing. In one of his books, he talks about his concept of negotiation. If your first offer doesn't insult the other person, then you offered too much. And that's what we call anchoring the top and the bottom of any negotiation, right? And so whatever somebody offers to you, and we all know we play this game. I always use car sales because it's the perfect, pure example of sales out there. When you go to the car lot, do you think the price on the windshield is the price that they will sell it to you for? No. And so the first thing you say is, no, I'm not going to pay that. And they say, well, what will you pay? And then you have this little game. But it all starts with no. Every sales negotiation starts with no. Anybody who goes in and pays retail on anything like that is just a sucker. And there are people that do it, but come on, that makes no sense. And so when we go into a sales process, I know if I'm trying to buy something, my first offer is going to be super low and I expect them to say no. So I, as a buyer, knows that the seller will say no. And I, as a seller, know that the buyer should say no. And if they don't, then I'm going to get more than I want. So everything starts with no. It's amazing. I'm on city council here. We had a contractor come into the city and they wanted a bunch of money to do something. And my city manager says, what am I supposed to do? I said, call him back and tell him no. He's like, that's pretty harsh. I'm like, that's negotiation. Just say no, right? You say no and be willing to walk away, and you will win more negotiations than you won't. So the two prong is, if you're offering, it needs to be higher than you want, because if you have a negotiator, they're going to say no. And if you're buying, you always go low, hoping that they'll say no. And that's where the negotiation starts. So literally every single negotiation starts with no on one side or the other.
You know, that's one of those things that we've been doing for quite a while. I don't know if you've checked into what we do, but I talk to a lot of distressed sellers, like a
Hmm.
lot. And I always do an anchor, like you
Hmm.
say, to see where they're going to fall.
100%.
And I'm doing exactly that. I'm trying to get that first no, just kind of measure whether this is something to pursue or not.
One of these contracts I put today, they wanted 260 for this condo. I buy a bunch of rentals. I said 240. They came back and they said, okay, 240. We had the inspection done. The inspection came back with an HVAC problem and a water heater needs replaced. And I said 230. And they came back and they said, we're not going to take less than 240. I walked away. And I let it sit for 2 weeks. And the agent came back and said, they'll take 230. And I said, oh, that's, 220. And they were like, 220? I'm like, 220, that's my best offer, and I'll close in a week. I ended up getting the contract signed, and I talked to the agent just this morning and I said, we started at 260 and we ended at 220. And I know you think I'm crazy sometimes when I make these ridiculous offers, but I got us from 260 to 220. That's a big drop. She's like,
Mhm.
sometimes you amaze me. I'm like, I say no and I'm willing to walk away, and I win more than I lose.
Yeah, that's especially interesting when you're talking to any kind of seller. As soon as you don't want to chase at all. That's one of those
Mhm,
things that I've been preaching for a while. To convince people of something is
mhm.
almost pushing a boulder up a hill. You got to have them convince you as
Yeah,
to why they should
yep.
sell it.
In politics, we say if you're explaining, you're losing. You don't explain. This is the deal, and you go from there.
So, Brian, let's get this conversation into real estate investing. You already mentioned that you just recently
Mhm.
bought a condo. How do you leverage some of these skills to bolster your real estate investing?
You know, I use a couple of different real estate agents because I have properties in Georgia and Florida. When I found these agents to work for me, because I'm not a real estate agent, the first thing I tell them is, listen, if you're going to work with me, we're going to do a lot of offers and we're going to do a lot of back and forth, but I do buy. So if you don't want to play the game with me, then don't work with me. But if you do, we will buy. We've made probably a dozen offers in Tampa to get the three that we signed in the last week. And it's just a constant back and forth, but I don't get emotionally involved. I always lowball, and I'm not going to buy unless I feel like I got a great deal. That's what I do because I've always had the attitude that there is no super amazing deal that can't be replaced with another super amazing deal. There's always going to be another super amazing deal. So we just don't get emotionally attached to any of this stuff. Only buy when we get a good deal. That means hopefully I'm always buying equity the day I close. This one today, they wanted 285. They literally just signed it before I came on with you. Wanted 285. I originally told the agent I'll go as low as 260. And so she called that agent and said, "Hey, I know you're asking 285, but what's your best offer?" And she said 260. And so my agent calls me back and she says, "They said 260." I said 255.
Mm.
So we signed the deal at 255. So that's the way I do all negotiations. That's the way I buy. That's the way I sell. Don't get emotionally involved. Always get a good deal. And there's always another good deal out there.
Yeah, and always being willing to walk away. One is that you're buying this stuff, it sounds like, off the MLS. Like,
Mhm.
and
Zillow.
people will, you hear time and time again, people will say there's no deals to be had off the MLS.
There's always desperate buyers, sellers out there. Like, why did this person drop from 285 to 255 today in literally 5 minutes? And then they came back and they said, well, all I asked was for a 14-day inspection and I'll close in 21 days. And they said, well, we need it shorter than that. So, Jack, you're in the real estate business. If somebody says they need to close faster than 21 days, what does that tell you? They're
They're more
desperate.
desperate than you realize.
I said, Stephanie, there's blood in the water on this one. So 255, drop it another 5 grand.
Yeah.
Uh, it's reading the room, reading the situation. I make these offers sight unseen, and then I go through the inspection process to see if I actually want it.
Well, there's always a give and take there too, right? Like, I've always learned just from experience that if they want to close faster, I need to get something in return. I'll
Yeah,
provide that, but yeah, it's a lower price or something else.
yeah. So it's a game. I'm a sales guy at heart, so I really enjoy the thrill of the kill, so to speak.
You know what? I think you said it was like 280 and you got it down to 260 or whatever.
Yep.
But you ask them, you simply had the realtor ask them what's their best price.
Hmm.
They negotiated against themselves on the first vol.
I called on a mountain house today that I've been looking at buying, and they're asking 529. I know that they bought it for 541 about 18 months ago. So again, we have to analyze. They bought it for 541. It's now 529. Something's wrong, right? We
Mhm.
obviously know there's something going on here because people don't just put their house up for sale at a loss 18 months later. And so when I called her, I said, I know you're asking 529, but what will you take? And she said, well, this is less than what they paid. They're going to lose money. I said, ma'am, I've owned 50 properties in my life. I've lost money on properties before. I get it. That's not, I mean, that doesn't mean anything to me. She goes, well, they're willing to go, 529 asking price. I said, well, I'm looking at five. She goes, well, I'm just telling you they won't take that, but you should come out and look at it. She did not know she negotiated against herself. And I'll go out and look at it. I think we're going out Wednesday to look at it. And then I'm probably going to come back at five and we'll see where they go. If I don't get a good deal, I won't do it. If I do, I will.
Yeah. Otherwise, they wouldn't have even asked you out
Mhm.
to
Yeah.
look at her.
She says, I'll make an offer of $1 if that's what you want. I'm like, okay, sounds good. She goes, but they're not going to take it. You know how many times people said they're not going to take it and they take it?
Yeah.
A whole lot.
So I don't know if you've experienced this, but I definitely have, is that, I'll have realtors offer for us as well, but I always make them put it in writing and put it in front of the potential seller,
Mhm.
not this verbal stuff.
Yeah.
Because it seems like the actual something in writing has way more impact.
So that's the other trick I'll do is I'll do a verbal first because I want to see if they'll play ball. So let's just give an example of 280. I did a verbal of 260 and they said, no, I'll put it in writing at 250 because I want to know if 260 was real or not. They said no to 260. If I put it in at 250, I want to see if they'll come back at 260, which is what I wanted to do in the first place on the deal. So I kind of use both the verbal and the written. When I feel like I really want to see where they are, I'll do the written, but most of the time I'll start with a verbal.
So one of the things that I noticed that on your website, you offer fractional COO.
I do.
So could you talk a little bit like somebody who's in a fractional, because there's a number, I've seen a lot of fractional CFOs,
Mhm.
especially CFOs.
Yeah.
When they engage a fractional COO, what would you typically say that they're going to experience?
So even in a fractional COO role, the first thing we do is we go in and look at 2 years worth of financials. And so in order to run a company, and when I said this earlier, you need to understand financial analysis. So if you're going to hire me as a fractional COO, the first thing I want to see is 24 months worth of financials, month by month, side by side over time. And what we do is we take those financials and we identify the core metrics, which generally are revenue, gross profit margin, net at the bottom. And we'll pull out anything critical like labor, material costs. If you have vehicles, it's vehicle costs, whatever your key metrics are, your critical metrics are. And then we build lines in to show percentages of each. So if I have 2 years worth and I start 2 years ago, let's say your labor was running at 25%, and each month has a percentage attached to it for your labor cost. And we look at 2 years and see your labor starting to slowly creep up. Okay. And then we look
Mhm.
at your gross profit margin, which is your material cost. If your material cost is slowly creeping up, then we know, for instance, that either your pricing is not keeping up with your increased material costs and labor, or something else, or you're lowering your prices, something's going on. So if we look at every single key metric in a profit and loss statement over 2 years, I can identify and tell you what's going right and what's going wrong in your business. In fact, I call this time travel. If we look at the last 2 years and look at those percentages and we extrapolate it out another 12 months, I can tell you what's going to happen in your business a year from now. One of the things I tell people is like, we're going to teach you how to time travel because I'm going to look at your past, where you were, where you are, and I can tell you where you're going to go. And if you don't like where you're going to go, then we need to start making changes. And the changes happen within those key metrics. And so then my job as your fractional COO is to help you change those key metrics, right? Along with making, and that's building a future pro forma and then helping you make the right decisions, whether it's labor, material, or whatever core metric you've got. So it's literally data analysis is what we do. And then it breaks down into the sales organization and marketing costs and return on advertising spends and close ratios and revenue generated per lead, per agent. Most people that hire me don't have good financials and have no clue how to analyze them. And so that's the majority of the work I do.
Well, I would imagine you come in something, this is a pretty big shakeup. I'd have to think this is pretty transformative. When have you ever run into people that just don't even have key metrics in place? I
Most
got an eye roll, so I'm guessing that's the case for a lot.
most small business owners under 2 million in revenue don't have squat when it comes to financial statements. Well, Susie does them every now and then. I get them maybe once every 3 or 4 months. I don't really know. I always say, "Well, what's your gross profit margin on your business?" I don't even know what that is. What's your labor percentage against your job costs? It's either run by job or it's run across running a retail business something. I have no idea. Okay, well, when your market's growing and it's a good market, you're probably doing okay. But if something happens like COVID and you don't understand how your business works, that's where you're going to get in trouble. So, yeah, we take people who have no clue and we teach them how to be better business people than most businesses under 10 million. More than half of them don't have a clue what they're doing. They're busy being the technician. I have a client right now who's in the construction industry. He's a great at the construction industry. And I pulled his financials and they're a complete disaster. It would blow your mind. And yet he's profitable, but he could be way more profitable and work less once we get everything fixed.
Could you share give us a concept, give me a story of a transformation of where they came in at and where they are today and how they're progressing?
I'll give you one we did, and this was a pure sales one. We went into the organization and start doing all the data analysis with inside their sales. So here's a perfect example. They had a sales organization of 7 people. They were at a 27% close ratio against all of their marketing. And they wanted me to get them to 30%, just 3 percentage points. 3 percentage points on $15 million. So we went in, and most people think sales is sales, and it's not. Sales is the opposite side of the marketing coin. So if it's a coin, sales on one side, marketing on the other. The first thing we did was we took a look at all their marketing, and out of the 29 marketing channels, 11 of them were not profitable, right? So you've got Google, you've got Bing, you've got shows, you've got Valpaks, you've got all the different marketing avenues or channels they had. 11 out of 29 were losing money. They didn't know that because they'd never tore it apart. So we said the first thing we're going to do is eliminate those 11 that are non-profitable, reallocate that money into the profitable, and you will see your lead count go up 20%. No more marketing dollars spent, just 20% more leads. Then we took their sales force and we said, okay, and I find this to be very typical, Jack. We go in, if I look at 10 people in a sales force, 2 of them are losing money, sometimes 3. But they don't know that because they don't do what we call profit and loss statement by sales rep. And that is critical in the sales game. We find the top guy's making $500,000 in profit. The next guy's 300,000 in profit. The next guy's 200,000 in profit, then 100, then 50. This person's breaking even. And the bottom 3 people are losing $100,000 each because their allocation of operating expenses, the dollars that it costs to buy the leads we give them, exceeds the revenue they're bringing in. But unless you break sales down into individual profit and loss statements, you don't see that. So when we reallocated the money in marketing, we generated more leads with no more dollars spent. We fired the bottom 2 salespeople, reallocated their leads up to the people making money. Sales went up 20%. I can tell you, we started a little program on December 15th and generated an additional $500,000 of revenue just by what we call remarketing old dead leads with the better sales force. So these are the things we break your P&Ls apart. We break your sales and your marketing and your operations apart. Data is the key. So I'll give you, this is the thing I tell people, Jack. If your business is over $2 million, I ask people all the time, what business are you in? What do you do? And they'll say, oh, I'm a landscaper, or I'm a painter, or I'm a plumber, or I'm like, no, if you're over 2 million in revenue, you're in the data business. What you're telling me is what the product is that you sell. And the product that you sell is not as important as the data behind the product that you sell and how you sell it. Because I don't care what you sell. If we can fix the data and get more leads at a lower cost and convert at a higher conversion and get salespeople that convert at the right conversion rate, then you will make more money without spending any more, and you'll do it with less people. That's data analysis, and that's what drives people. Facebook is not in the, my picture's on my page business. They're in the data business, and that's why they're a $1 trillion company.
So a lot of people that are listening to shows like this, they're either getting into this or considering starting a real estate investing business, or they're actively in hot pursuit right now. I find it curious that people will see service such as yours as an expense versus an investment.
Oh, yeah.
Could you talk a little bit to that and getting over that type of mindset?
I have a young lady that is one of my clients, and we literally, when we first launched with her, again, went back to her financials, took the financials, found out that she had overpaid on a Lowe's account to the tune of $20,000. Well, that paid for 6 months worth of consulting right there, just recovering the overpayments. Then we had another client that was trying to play a game with her and not pay her. And I literally scripted, you're going to call and say this, this, and this. And she got a check for $14,000 the next day. I mean, we are not an expense. We are going to make you a crap load of money because we're going to make your business better. We're going to make you a better business person. We're going to make you more money. Otherwise, what would be the point? I had a public company. I went in, they were losing $1 million a month in their division. And within a year, it was the most profitable division they had, simply because their marketing and sales department was screwed up. So it is literally all about the data. And what we do doesn't cost money, it makes you money.
So the people that are wanting to, you've scared everybody enough here now, Brian. They want to try to take some sort of reins on some of this data. Like let's say it's just somebody who wants to start. Where should they start? Where's the low hanging fruit that they could possibly?
If you have a business and you are generating revenue and you are making money, then you need to start looking at data analysis, right? If you are starting a business and you haven't even gotten started yet, find somebody who can help you get started and avoid the mistakes that you are going to make in your new business. If you have a business generating a lot of revenue and it's not making the profit you want, or it's not growing the way you want, it's a very simple reason why. It's because you don't know how to do it. This is one of those check your ego things. If you've never built a bigger business than you have today, you don't know how. And if you don't know how, you're going to find somebody to help you do it and have a much higher chance of success. So find somebody that can help you either way, just starting out, in the middle, or trying to scale. I tell people all the time that my specialty is 2 to 30 million in revenue. That's where I thrive, because that person's got enough money, enough data that we can really start to scale that business. I also tell people, Jack, that what we do, which is consulting, mentoring, coaching, whatever you want to call it, is for a reason and for a season. If there's 3 types of people that you want to hire, there are tactical people. That's what I do. I do tactical coaching, tactical consulting. We literally go in and make specific changes to your business to make it go better. So that's tactical. There's technical, and technical is you're in the real estate business. I'm looking at your website here. I do not know how to get into the apartment complex business. I'd love to know how, but I don't. So if that's what you want to do, find somebody who knows how to do apartment complex stuff, hire them to help them teach you how to do what they do. That's technical. And then there is the emotional side, or what I call the soft side, and it's the mental, right? That's somebody that's just going to help you get over your fears and get through your day and, make sure that you're thinking the right things and all that kind of stuff. So technical, tactical, and then the emotional side. I jokingly say I'm not the emotional guy. I'm just going to tell you, you're not doing this right. You need to fix it and do it my way, and it'll work. And if you don't, it won't. I'm also not the technical guy, so I can't get into the technical aspects of whatever it is you do. Find somebody that can be in one of those. For a season, I can take you from 2 to 30. If you get over 30 million in revenue, you need to go find somebody else. I've built multiple companies to that size. I've never built a $100 million company. So if you're a $50 million company, I can't help you.
Sure. Well, just another time, brianwillmedia.com, brianwillmedia.com. You can find his numerous books there, as well as some additional information. I see you even have online courses. Right?
We have a sales course, which takes you through the whole sales process. And it talks a lot about why people should buy from you. Why should they buy your product? We call this the psychology of sales. It's based on my book, which is called No, the Psychology of Sales and Negotiation. Sales is not about cheesy sales lines. It's about understanding why people will or will not buy from you. It's the actions you take and the things that you do and the way you do them that will either increase your probability of selling or decrease it. So it's a great course for sales organizations, whether you're individual or you have a sales force that you're training. The second course is launching, I think, next week, and it's a financial analysis course. A lot of the stuff I just talked about is in, I think it's a dozen video modules. The financial analysis is super technical, so it's a great backdrop. Once you've gone through both courses, though, there's an option to consult with me on Zoom calls to get you more dialed into whatever it is you're doing. So yeah, those are both on there.
So, well, Brian, this has just been fantastic. Again, it's brianwillmedia.com. That's going to be a clickable link in the show notes. Before we do, is there anything we should have touched on that we might have missed?
No, this has been a great show. You've hit on a lot of super hot buttons that are going to help people succeed.
If you're ready, we'll dive in and we'll close out this episode.
All right, I'm ready.
So you can kind of expand this to business owners, but I typically ask, what is a lie real estate investors tell themselves?
This is a surefire winner. This is a great deal.
Yeah. Sometimes people, I just find, like, this is from my personal experience. Sometimes you fall into this trap of just wanting the next deal. So you start to convince yourself that you should buy.
Yep. I got to do this deal. I got to do this deal. No, you don't.
Yeah.
There's another great deal, probably a better one around the corner.
If you could go back in time and give your younger self a piece of advice, what would it be?
Oh gosh, real estate investing wise, if I'd have bought one house a year from the age of 20, I would be like 10 times richer than I am today. But I didn't learn real estate investing until I was 50. And I've made a crap load of money since then. But gosh, that'd be the real estate thing. The other thing, I was way too focused on business and not enough focused on my family. Unfortunately, I ended up in what we call the entrepreneurial divorce because I was so business focused. Don't ever, ever, ever let your business get in front of your family. So that's a big one.
Do you have a book recommendation?
All of my books. I will tell you I have these are my favorite books, right? So number one, and this is a classic, Rich Dad, Poor Dad. I think the mindset behind that book is amazing. Really gets you into the employed, self-employed, investor, business owner. So that's a huge one. My second favorite book is called Blink. And Blink is by Malcolm Gladwell. And it's how the brain works and why people do what they do and make decisions. But more importantly, it's why people succeed and why they fail. I touch on a lot of that in my book called The Dropout Multimillionaire. And then the book, The Tipping Point. And the tipping point is all about why things end up succeeding and why they don't, why some people are super successful and why they're not. I love the example of Bill Gates. If Bill Gates hadn't been born, are you telling me that we wouldn't have computer software today? We would. Somebody else would have figured it out. But because Bill Gates' dad was a lawyer, mom was a college professor, he had access to the brand new computer science department at the university where they worked, and he was interested, he ended up creating MS-DOS, and that's why Bill Gates is one of the richest men in the world. But if he hadn't done it, somebody else would, right?
Mhm.
So what that means is your future is completely in your hands and you can do anything you want to do. People aren't that special. Maybe Elon Musk is, he's crazy genius, but you have the ability to do what anybody else has ever done. You just got to figure out how to do it yourself. So those are my favorite books amongst, of course, my 4 books.
And finally, what single strategy or tool have you implemented that has had the biggest time-saving impact to you or your business?
This one's huge. Actually, you haven't seen my last book. It's called The Invisible Multimillionaire. It's this one right here. It just released this year. And the concept behind The Invisible Multimillionaire is this. If you are going to scale a business to a large level, or if you are going to exit your business at some point, you need to learn, master, and abide by delegation. It gets back to you can't be everything in your business. You can't do everything in your business. You're not smart enough and you don't want to. So you've got to learn to delegate. Bring people in who are strong where you're weak. Bring people in to take over all the minutia that you don't need to be doing on a day-to-day basis, and eventually replace yourself as a leader of an organization so that you have the ability, if you want to either take your skill set and get bigger or sell that business, create generational wealth and walk away. So delegation is the key.
Oh, Brian, this is just fantastic. One last time, brianwillmedia.com, brianwillmedia.com. I hope you consider coming back again sometime. I really enjoyed it.
Anything you want, my friend.